Welcome, ladies and gentlemen, to the advanced market structure video. Now, we're gonna get started right away. This chart that you have in front of you right now, very clearly you can tell that this is GBP NZD and that we are currently on the 4-hour time frame. And the market structure that you have in front of you is indicating to you that this market is bearish. But as soon as I snap my fingers, my editors have just zoomed in to only the chart. And now I can flicker down a couple pairs and now you no longer know what market this is or what time frame we are on. All that you do see is that you have market structure in front of you. So it does not matter what currency pair you have, what stock pair you have, what crypto markets in front of you, binaries, anything that has a chart has market structure. You can't tell what market this is and you can't tell what time frame this is. What you could tell is that this market is bullish or bearish. Market structure is absolutely everything in the market, and in this video I'm going to be explaining to you the advanced way on how to look at market structure and not care about the time frame and not care about the markets behind the market structure. Welcome to the advanced market structure video. Oh, and by the way, this market is AUD USD and it's on the 4-hour. I can go back in and I can change a couple different pairs and I can change to a different time frame and I can snap my fingers again and we're at a new currency pair, and now here you can't tell if we're on the higher time frame or what pair we're on. And this is actually NZD USD on the 15-minute time frame. Market structure is key, everything else does not matter. So let's begin with the most important thing when identifying market structure, which is going to be higher highs and higher lows. If a market is bullish, a market is consisted of higher highs and higher lows. It is impossible, and I cannot stress this as much as I wish I can. It is impossible to have a bullish market without a higher high or a higher low. A higher high tends to be the highest points of where that current market structure is, and the last higher low is the last higher low, not the highest low or the most low. I don't know why people confuse this, and this is a advanced video. So I want you guys to understand the importance of reading this correctly, because it's going to be a lot easier for you to enter trades and capitalize off of them in the future. So we know that this is the higher high and this is the higher low. The market will remain bullish as long as we stay in between this higher high and higher low. The moment we body close above or under this line is when we will have a shift in the market. If we close above this higher high, that means we've created a new higher high. And the higher low has to be the last higher low. The simplest way of reading that is going to the highest point. And I like using my snake trick, where I simply get this body of the snake, and at the moment that the snake has a sharp turn, that is the most higher low. A snake, when it wants to move in a different direction, it goes and then it turns, and then it turns, and then it turns. The market, when it wants to move in a different direction, it turns as well. So this is the market turning from being this higher low to then this higher low. And once again, as long as the market stays in between this higher high and this higher low, the market will be bullish. Now we can get as close as we can as we did to this point right here, and we still would be bullish. Remember, we are only shifting market if we body candlestick close above or if we close under. If I take this to the chart, for example, let's say that this would be the higher high right here and that this would be the higher low right here. This is the head of the snake at this point right here. The snake goes, it turned, and it keeps going down. This is the higher low. We do not place the higher high or higher low at the wicks of a certain move or at the wicks of a certain move. Higher highs and higher lows are placed at the bodies of the candlesticks, because this is where the market structure is. If I were to come into here and I would erase the candlesticks and go to the line chart, you can see that the structure is at this higher low and at this higher high. If we go back to the candlesticks, you can see that the wicks are just the trail of where the market went, but it's not the actual market structure. So once again, it is impossible to have a bullish market without a higher high or a higher low. The market will remain bullish as long as we stay in between the higher high and higher low. The moment we body close above, we have then created a new higher high, and we must have a new higher low once we have a new higher high. It is impossible to have a new higher high without a new higher low. And as long as we don't body close above either one of these lines, this market will remain bullish until we close above or we close under. And that is one of the main issues with traders nowadays, because they just pull up to a chart, and because they see the overall movement heading up or the overall movement heading down, they think a market is bullish or a market is bearish. And that cannot be further from the truth. This is one of the biggest mistakes that traders make, and says they are not analyzing the market structure correctly. They are not analyzing the trend of the market correctly. The simplest example that I can leave of this is, let's say that you are hunting, and a hunter, in order for it to catch its prey, they follow footsteps or the tracks of an animal. If you aren't reading correctly the tracks of an animal, if it's going in one direction or if it was coming towards this direction, you can completely be walking the opposite way of where the animal is going. And this is exactly what people do when they analyze the markets incorrectly. They can assume that they're reading it correctly, but they're actually doing the complete opposite and just digging themselves in a deeper hole. And this right here is a perfect example. Up to every single example that I have just shown you guys right now, this market was bullish until we body candlestick closed under this higher low. If you're a beginner trader and I show you this chart like this, you'll probably say that this market is bullish, because you would look at it and you would take an assumption that overall this is bullish because it's just heading to the upside. But that cannot be further from the truth. Why? Because this once upon a time was the higher high, and then this was the higher low. The fact that the market has now body candlestick closed under this area means that this market is now bearish. We have shifted the market structure from being bullish to bearish. So has the trend. The trend is identified by the market structure. Without market structure, you cannot identify the trend. Without footprints or tracks, when you go hunting, you cannot tell if there's an animal there and where it is going. It is absolutely impossible. It is absolutely impossible to tell if this is bullish, bearish without the market structure. So since this has now created a new lower low, this becomes the new lower low, and you must need a new lower high. It is impossible to have a new lower low without a new lower high. So if we were to implement the exact same snake trick, you get the head of the snake right here, you follow the body here, and as soon as the movement turns, this now becomes the new lower high. That is where the snake has shifted. That is the last lower high that the market has left. Now, exactly the same as when the market was bullish. This market can do absolutely whatever it wants inside of here. As long as we don't body candlestick close above or below the lower high or lower low, we will remain bearish. If we decide from this point right here to then do this, we have created a new lower low, meaning we must need a new lower high. And the new lower high is identified by getting the head of the snake, following it back, and as soon as you get the turn, that is where the new lower high is placed. It is very easy and very straightforward. Now, same exact thing happens. The moment the body candlestick closes above, we have now shifted, and now this is a new higher high. This becomes a higher high. It is impossible to have a higher high without a higher low. So then this higher low will then shift to then this new point right here. This is the simplest and most advanced version of market structure, just to identify what the market is doing. Because a somewhat experienced trader that still hasn't figured it out just yet can look at this market and be like, oh, this market is in consolidation. This market is choppy, it's in a ranging market. Sure, it could be in a ranging market, but inside of a ranging market, there is market structure. Now, what is the market structure doing? Is the market structure bullish or is the market structure bearish? It does not matter if it is even a market structure that is as tight as this one right here. It can be in the most choppy movement that you have ever seen in your life, where it is in the exact same spot for weeks, months, years. It can be in the exact same spot forever, but there is market structure inside of this consolidation move right here. And I want to test you. I want to see if you've been paying attention up to this point right now. Pause the video and tell me inside of that consolidation, is this market bullish or is this market bearish? And you know what? To make it a little bit easier, I've decided to make it a little bit bigger so you can go ahead and take your time and not make a mistake. Pay attention to what I just said. Now that you have your answer, I want you to know exactly why you have your answer. You might be correct or you might be incorrect, but I want you to know exactly why you're correct or exactly why you're incorrect. This market started off as creating a higher high, and this point down here was then the higher low. As long as we remain above or under the higher low, we will then continue to be bullish. The market body candlestick closed at that very point right there. Yes, something as small as that counts as a shift of structure because the market simply did shift structure. So then this becomes the new higher low, this low point right here that closed under this line. Then we need a new lower high. It is impossible to have a lower low without a lower high. We get the head of the snake and then we follow it up. Where does it turn? Right here. This is the snake trick and that is the new lower high. Cool. As long as we remain above or under these lines, we will remain bearish. We body candlestick closed above at this very point right here, where then it has shifted to then being bullish. This is the new higher high. We do the snake trick. This becomes the new higher low at this point right here. We shifted bearish once again here. Now that we've shifted bearish, we do the snake trick. It turns and this becomes the lower high. This becomes a new higher high, so on and so forth. This becomes a new higher high. After this point, the market did not shift up into this point. This becomes a new higher high. And then this becomes the higher low. Body candlestick close under. This now shifts bearish. This is now the head of the snake. And if we follow the body of the snake, this is where it turned. So this becomes the lower high. And this market structure as of right now in this ranging market is bearish. So if you answered this correctly, make sure you know exactly how you did it correctly. If you answered it correctly and you didn't do it like this, you simply answered it correctly without knowing how to analyze the market correctly. So make sure you write down these notes because it's so important to executing trades and making money. So now that you understand that to perfection, because it is very simple, I want to ask you once again, another quiz. Is this market bullish or is this market bearish? Now pause the video, line it up, and why do you think it's bullish? Why do you think it's bearish? Place your lower high, your lower low, your higher high and higher low. Make a mistake because I'm going to be right here to fix it for you live. Go ahead, pause the video. So now that you've made a mistake, probably, or not, if you were paying attention in the last couple of minutes, this market currently started off creating a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. This is how this market would have looked if I would have presented it to you on the line chart. This is how I see this market in the candlestick chart. This market is indeed bearish, and this point right here is the lower high, and this point right here is now the lower low. It is very simple, very straight to the point. Until this market does not body candlestick close above this point or this point, there will be no shift in structure in this market. Same exact thing right here. This is the lower high. This is the lower low. So the market does not body candlestick close above or under. There is no shift in this market. This market will remain bearish into that very point. And you want to know the craziest part? That you didn't even know what time frame this was on. You can't tell if this is on the daily, if this is on the weekly, or if this is on the 1 minute. You want to know the best part? You will never know. And I wanted you guys to identify that market for what the market is. Not because it's a crypto and the crypto's down, or because it's a stock and the stock is strong, or because it's a currency pair and one pair is stronger than the other. that does not matter when you're reading market structure. When you're reading market structure, you're reading market structure, and that is it. Now we are on to the next quiz. Once again, pause this video. Is this market bullish or is this market bearish? Place your higher highs and place your higher lows, or your lower highs and lower lows. So now that you have placed your higher highs and higher lows, let's see if you're correct. This market currently at this very moment started off creating a lower low, lower high, lower low, higher high, higher low, higher high, and now we have a lower low. This market went from creating bullish structure to now shifting to bearish structure. This was the higher low at one point, and this was the higher high at another. The moment the candlestick closed under, this has now shifted to being the lower low, and this has now shifted to being the lower high. Reading market structure is so essential to understanding what the market is going to be doing so you can make an execution on a trade and make money. The best example that I can put of this is, let's say, an experienced hunter. An experienced hunter, they're going to be able to see the track of an animal, identify what type of animal it is, if it's a male or a female, and if that animal is heading to the north, heading to the east, heading down to a river to drink water, whatever the case is. This is what we are looking at right here. We are looking at the tracks of the market. We're able to identify, is this market going to the upside? Is this market going to the downside? The different types of time frames let us know the details of the movement, but it's the exact same movement. A hunter can look at a track, and if he looks at it with his vision, if he puts on glasses, gets a microscope, takes a picture, scans it, it's the exact same track. It's just different ways to identify it so he gets a better idea of what animal it is and what age it has and what direction it's headed. When we're looking at the market, when we zoom in into the lower time frames and go to the higher time frames, we're looking at the exact same market structure, just more details of it so we have a better understanding of how much more can this move go, how long can we have on our stop loss, on our take profit, where should we see this going within a week, within a month? Is this market even actually gonna go there? We're just looking at the same movement, just in a little bit more detail. So with reading the market structure correctly, you're gonna be able to understand where the market is headed. And then there you can decide what you're going to do. Is it the right time to execute a trade? Should I wait? Or do I need something else for the market to happen for me to execute a trade? Perfect example is the hunter. The hunter can see what type of track it is. Let's say he identifies that it's an elk, and he can tell by the size of the footprint that it's a very big male elk. But the elk is headed up a mountain. And usually elks, when they head up a mountain, it's to eat food, but for at nighttime, they come back down. Again, I'm not a hunter, this is just a theory, but at that very moment of you looking at that track, it's early in the morning. Does it make logical sense for you to go up that mountain behind the elk, or should you wait till a little bit later in the afternoon and wait for it to come back down the mountain so then you can go and proceed your shot once the elk comes to you? This is the exact same thing in the markets. When you do market structure and you do your top analysis and you understand if the market is bullish or bearish, you can decide, should I go and chase this market and continue buying with it? Or is the market at too much of a high price or too much at a low price and wait for a retracement so then I can execute the trade? You identifying the market structure correctly will let you know exactly at what point the market is, and you can make a decision off of that right then and there, which the majority of the time, it's gonna give you anywhere from a 60 to 75% accuracy on every single one of your trades. And to show you how easy this is, let me show you. So right here, you can clearly identify that this market structure at this very moment is bearish. This market was creating lower low, shifted to bullish, then shifted right back to bearish. And now we have a lower high and a lower low, making this market bearish. Now that this market is bearish, it is at a lower low. Now you can make a decision at this lower low. Should I sell at the lowest point this market has? Which in turn, if I were to flip this chart around, it is, should I buy at the highest point this market is? Or should I wait for some type of retracement? And when we have this retracement, now I'm getting a better rate on the investment that I'm making, it makes more of a logical sense, so then I have a greater return. That is exactly what market structure does, and it gives you the perfect entry point to doing that. And I have this video for you right here, which is the top-down analysis video, which I explain to the T on how to use this market structure to properly do a top-down analysis, and where and when and how to execute a trade so you're able to capitalize off of correctly reading the market structure. Market structure is only 50% of the problem. Now, how you do that together with top-down analysis, entry signal, and trading at the right times is where you actually make the money. And that's what this video is about. So make sure you guys go ahead and check it out, because I break down absolutely everything for free. Thank you guys very much for watching this video all the way to the end. Hit that like and subscribe button, and I will see you guys in the next video.